It's June 26, 2025, and the crypto market is a live wire, crackling with tension that could ignite a fortune or incinerate it. Bitcoin just surged 1.27% in the last 24 hours, smashing through to $107,973.74, pushing the total crypto market cap to a jaw-dropping $3.31 trillion up, $114.26 billion in a single day. But here's the shock that stops you cold. The fear and greed index is teetering at a neutral 48, a tightrope walker swaying between panic and euphoria, while the altcoin season index whispers a feeble 17 out of 100. Bitcoin dominance roars at 64.5%, suffocating altcoins like Ethereum, which is bleeding 2.27% at $2,496.40. The market is a pressure cooker, and the question screams louder than a siren in the night. Is this Bitcoin bull run a rocket blasting to the moon or a ticking time bomb set to crater your portfolio? You're an investor, an entrepreneur, a forward thinker standing at the edge of chaos, and what I'm about to dissect could be the difference between riding this wave to millions or watching it crash over you. I'm diving in with surgical precision, pulling from the minds of John Maynard Keynes, Joseph Schumpeter, Nassim Taleb, and Yuval Noah Harari, to give you clarity in a world gone mad. This is the message you cannot afford to miss. Imagine a battlefield where Bitcoin stands as the towering general, its $107,000 price tag a war, banner flapping in a storm. Ethereum stumbles at $2,496, its armor dented and red with losses, while Solana and XRP cling to faint green gains, $145.36, $2.1921 like wounded soldiers refusing to fall. The market cap chart on CoinMarketCap's dashboard is a jagged mountain range, cresting at $3.31 trillion, but the volume bars below pulse erratically at $111.32 billion, a restless tide of capital sloshing through the trenches. The fear and greed index needle hovers at 48, a compass spinning wildly in a tempest, unable to settle between dread and delirium. This is a market on the razor's edge of history, and you're gripping the reins of your financial future as the ground quakes beneath you. Let's cut through the fog with raw, unfiltered truth. Bitcoin's 64.5% dominance isn't just a number, it's a warning flare lighting up the sky. Altcoins are choking in its shadow, and history whispers a brutal lesson. When Bitcoin's grip tightens this hard, a violent correction often follows. Schumpeter's creative destruction is alive here. Bitcoin's relentless innovation is devouring the market, reshaping it in its image. But Taleb's anti-fragility principle raises a clenched fist. Systems this concentrated are brittle, vulnerable to black swan shocks that could shatter them in an instant. If you're holding Ethereum or Solana, you're perched on a fault line, and the altcoin season index at 17 is the Grim Reaper's tolling bell. Bitcoin season is a juggernaut, and it's crushing everything in its path. The data is screaming at you to reassess your moves now, before the earth splits open. Shift your mindset. This isn't chaos to fear, it's chaos to master. Bitcoin at $107,973.74 isn't a random spike. It's a collision of macro forces you can harness. Milton Friedman's monetary theory hands us the first key, the M2 money supply. That river of cash and near cash flooding the system is slowing to 3.1% year-over-year growth, per the Federal Reserve's real-time feed on June 26, 2025, a steep drop from 8% in 2023. This tightening squeezes risk assets like altcoins, explaining Ethereum's 2.27% stumble, but it's rocket fuel for Bitcoin's narrative as an inflation hedge. Daron Acemoglu's institutional economics sharpens the lens. Centralized monetary policy picks winners and losers, and right now, Bitcoin's fixed 21 million supply is the golden child in a world where fiat is losing its grip. But there's more. The fear and greed index at 48 is straight out of Daniel Kahneman's behavioral playbook. Investors are paralyzed, caught between buying the dip and chasing the rally, and that indecision is a coiled spring ready to snap. History backs this up. In 2021, Bitcoin dominance hit 65%, and within 3 months, a 30% correction slammed the market as capital pivoted to altcoins. Are we staring down the barrel of a repeat? Let's dig deeper. Zoom into the CoinMarketCap 100 index, $203.98, up a modest 0.87%. The chart is a choppy sea, waves of volatility crashing against jagged cliffs of uncertainty. The market cap graph tells a tale of a steep climb from $3 trillion to $3.31 trillion in days, but the volume bars are shrinking, a classic divergence that growls caution. It's a lion roaring with a slowing heartbeat, and the altcoin season index at 17 is a faint echo in a howling Bitcoin storm. This isn't just data, it's a roadmap. Bitcoin's 1.27% gain today isn't isolated macro data from the U.S. Bureau of Labor Statistics pegs Q2 2025 inflation at 4.2%, fueled by supply chain snags and energy shocks. Vaclav Smil would point to our fragile energy grids as the culprit, and in this mess, Bitcoin's scarcity shines. Thomas Piketty's capital concentration thesis kicks in. Wealth inequality is shoving retail and institutional money into hard assets. And Bitcoin ETFs are soaking up $1.2 billion in net inflows this week alone, while Ethereum ETFs bleed $300 million out. Ray Kurzweil's exponential growth models whisper a tantalizing future. Bitcoin's adoption curve mirrors the internet in the 90s, hinting $107,000 could climb to $150,000. By 2026, the Klaus Schwab's fourth industrial revolution looms. Quantum computing could crack Bitcoin's cryptography overnight, a risk you can't ignore. Now let's pivot to action, tactical moves to turn this chaos into your edge. What's shielding you from inflation in 2025? Bitcoin's the frontrunner, but commodities are waking up. Gold's up 8% year-to-date at $2,800 per ounce. Silver's rallying 12% to $38, and WTI crude oil's hit $1.95 a barrel, a 15% leap since January per real-time feeds. Mariana Mazzucato's state-driven innovation lens highlights green energy as a hedge. Governments are pumping trillions into net zero, and the iShares Global Clean Energy ETF ICLN is up 18% this year. Allocate 20% of your portfolio to Bitcoin, 10% to gold, and 5% to ICLN. Diversify, but stay sharp. Next, master M2 supply like a pro. That 3.1% growth means liquidity's drying. Historically a death knell for risk assets, but a boost for scarce ones like Bitcoin. Friedman's velocity of money is at a 10-year low of 1.2. Capital's pooling, not flowing, parking in Bitcoin while altcoins bleed. Track Fred's M2 feed weekly. If it dips below 2%, Bitcoin could surge 15 to 20% as a flight to safety accelerates. Behavioral cycles are your third weapon. Kahneman's prospect theory says losses sting twice as hard as gains thrill, and that fear and greed index at 48 is a gold mine. When it plunges below 30, extreme fear strike. In 2022, it hit 25. Bitcoin bottomed at $16,500, then rocketed to $69,000 in 18 months. Set alerts for Bitcoin at $95,000, a 12% dip, and pounce when the herd flees. Jane Jacobs' urban systems logic applies. Markets thrive on resilience, and when altcoins bleed, capital flows back to Bitcoin, a cycle you can ride. But zoom out. Ian Bremmer's geopolitical risk models flag US-China trade wars escalating, with new tech export tariffs announced today. The S&P 500's down 2.1%, and a risk-off wave could slam Bitcoin to $90,000. Parag Khanna's connectivity thesis ties it together. Global markets are a web. When one sneezes, crypto catches a cold. The leverage now if you're overexposed. This isn't a drill. Look at Ethereum's chart, a 2.27% drop. Gas fees at 5.9 Gwei, signaling a ghost town next to Bitcoin's metropolis. Solana's $145.36 flickers hope, but a double top at $150 hints at a tumble to $120 if Bitcoin corrects. XRP's $2.1921 clings to a 0.28% gain, its volume a whisper in a hurricane. Bitcoin's the grandmaster, and the pawns are scrambling. Short term, I see a 15% correction to $92,000 by mid-July. Re-C at 72 is overbought, and volume divergence is a topping signal. Long term, the bull run lives Kurzweil and Piketty point to $150,000 by 2026 as institutions pile in. Peter Drucker's systems thinking urges us to see the big picture. Bitcoin's decentralized value proposition is ironclad in a world of 4.2%. INFLATION and slowing M2. Your 2025 to 2030 playbook, set buy orders at $92,000 and $85,000 Fibonacci retracement levels. Diversify 20% Bitcoin, 10% gold, 5% green energy. Watch M2 and fear and greed like a predator time your strikes. Keep 15% cash for Taleb's black swan plays. This market's a roller coaster, but you're not riding, you're steering. As the sun sets on June 26, 2025, Bitcoin glows at $107,973.74. A beacon in the storm, but clouds are massing. The fear and greed index at 48 is the calm before the tempest, and the altcoin season index at 17 is a fading pulse. You're at the helm, data your compass. Will you conquer the chaos or be swallowed by it? The clock's ticking act. The market doesn't pause, and neither should you. Let's peel back another layer. Bitcoin's hash rate is at 687 EHs. Miners betting big despite $12.34 transaction fees signaling. Network strain. Institutional adoption isn't slowing. BlackRock's ETF just crossed $50 billion in AUM, a 30% jump since January. MicroStrategy's 252,000 BTC stash, worth $27 billion, is a corporate fortress. But the Binance order book is a war zone. 407,818 BTC bids dwarfed by 3.77 million asks. If sellers flood in, a liquidity trap could spark a flash crash. King's animal spirits are frothing greeds in the driver's seat, but fear's riding shotgun, ready to grab the wheel. Commodities aren't sleeping either. Copper's at $5.20 a pound, up 14% this quarter, a green energy bellwether per Mazzucato's innovation playbook. Uranium's at $90 a pound, a 22% spike as nuclear power gains traction. 60 new reactors are under construction globally, per the World Nuclear Association. Oil's $95 a barrel is a tightrope. Supply chain chaos and Middle East tensions could push it to $100, but Vaclav Smil warns fossil fuels are fading as renewables hit 35% of global power. Allocate 10% to uranium via the URA ETF. It's a dark horse with 20% upside by 2030. Gold's $2,800 holds steady, but Bitcoin's outpacing it. Correlations at 0.7 per coin metrics, a dance of hard assets in a soft fiat world. M2's your crystal ball. 4.2% growth is a lifeline, but Velocity's 1.3 lag is a chokehold. If it dips below 1.2 per Fed's Fred data, a liquidity crunch looms, and Bitcoin could test $90,000. If it spikes above 1.4, inflation's roar could lift BTC to $130,000 by year-end. Behavioral cycles sharpen your blade. Fear and greed below 30 is your green light. But Twitter sentiment's 72% bullish now, per Luna Crush. When it flips bearish, strike history says a 50% rally follows panic. Don't tap. Scott's blockchain revolution is mid-flight. Lightning Network's 5,200 TPS is a glimpse of scale, but Visa's 65,000 TPS looms. Bitcoin's not there yet, but it's closing the gap. The bigger picture is a chessboard. Asia's crypto adoption is up 40%. India and Vietnam leading at 15% and 12% of their populations holding BTC per Chainalysis. Kana's connectivity fuels this tailwind, But Bremer's geopolitical lens flags US-China friction over Taiwan as a 2026 risk. A capital flight to the dollar could crush Bitcoin to $80,000. Hedge with 5% in USDT, it's liquid, stable, and ready for chaos. Amy Webb's tech foresight adds a twist. Quantum computing's SHA-256 threat could gut BTC by 2030. Diversify 2% into quantum-resistant QRL at 32 cents. It's a long shot with 100% upside. Your moves: 15% BTC, 10% gold, 5% uranium, 5% USDT by BTC dips at $92,000. Sell at $120,000. Track M2 velocity and sentiment daily pivot when the Fed blinks or fear peaks. This isn't a market, it's a war. You're armed with data, thinkers, and strategy canes. Liquidity, Schumpeter's innovation, Taleb's resilience. The volcano's erupting, lava flowing, tremors shaking. Bitcoin's your rocket, commodities your anchor, behavior your trigger. Will you soar or crash? The future's yours to seize, but only if you act now.